Hey everyone, times are tough right now. Inflation is still high, interest rates are through the roof, and everyone's feeling the squeeze. But for some of the biggest names in retail, it's even worse. They're teetering on the edge of collapse. In this video, we're diving deep into 15 major retailers facing an uncertain future. We'll uncover the factors driving their struggles, from changing consumer habits to crushing debt, and explore what it all means for the economy and, of course, your investments. All right, let's get started. Remember when Staples was placed to get your office supplies? Yeah, well, those days are long gone. For the past decade, Staples has been battling declining foot traffic as more people shop online. The pandemic only made things worse. All those people stuck at home ordering their pens and paper online, yeah, that hurt Staples big time. Fast forward to today, and Staples is still grappling with declining sales and a whole lot of debt. They've been closing stores, cutting jobs, and trying to reinvent themselves, but it's an uphill battle. Will they be able to turn things around? It's hard to say. The future of office supplies and Staples is uncertain. David's Bridal, the go-to destination for wedding dresses for generations of brides, filed for bankruptcy earlier this year. This wasn't exactly a surprise. The company had been struggling for years with declining sales as brides opted for less traditional, more affordable options. The pandemic, with its wave of postponed weddings, was the final straw. David's Bridal has already laid off thousands of employees and is closing stores across the country. They're hoping to find a buyer to keep at least some of their stores open, but right now, the future is looking pretty bleak for the once mighty bridal giant. Remember when there was a Walgreens on every corner? Well, those days might be numbered. Walgreens has been closing stores across the country as they grapple with declining sales and mounting financial pressure. They're facing a perfect storm of challenges, from increased competition from online retailers to rising drug prices and shrinking reimbursements. Plus, they've got a ton of debt from a series of acquisitions. Walgreens stock has taken a beating, and investors are getting worried. They're trying to cut costs and streamline operations, but it's unclear if it will be enough to save the pharmacy giant. Rite Aid, another major player in the pharmacy world, is also feeling the heat. They've been struggling for years with declining sales, store closures, and fierce competition. Like Walgreens, they're facing pressure from online retailers, rising drug prices, and shrinking insurance reimbursements. Plus, they've got a mountain of debt that's weighing them down. Rite Aid has been selling off stores and assets to try and stay afloat, but it's a race against time. Will they be able to find a winning formula, or will they become another casualty of the changing retail landscape? Victoria's Secret, once the undisputed queen of lingerie, has fallen from grace in recent years. Their hypersexualized marketing and lack of inclusivity have alienated many customers, leading to a steep decline in sales. Meanwhile, online brands like Third Love and Adore Me have swooped in, offering a wider range of sizes, styles, and more inclusive messaging. Victoria's Secret has been trying to play catch-up, but it's an uphill battle. They've closed hundreds of stores, revamped their image, and even brought back their iconic fashion show, though with a more modern, inclusive twist. But will it be enough to regain their lost market share? Only time will tell. Foot Locker, a staple in malls across America, is facing its own set of challenges. Sneakerheads, once loyal customers, are increasingly turning to online retailers like StockX and GOAT for rare and limited edition kicks. This shift in consumer behavior has left Foot Locker scrambling to keep up. They've been closing underperforming stores, experimenting with new store formats, and trying to beef up their online presence. But it's a tough market out there. Competition is fierce, and it's unclear if Foot Locker can regain its footing as the go-to destination for sneakerheads. Even home improvement giant Home Depot isn't immune to the current economic uncertainty. As interest rates rise and the housing market cools down, fewer people are buying new homes or investing in major renovations. This has led to a slowdown in sales for Home Depot, which relies heavily on big-ticket purchases. While they're still profitable, their growth has slowed considerably and their stock price has taken a hit. The big question is whether this is a temporary blip or a sign of a more prolonged downturn in the housing market. If it's the latter, Home Depot could be in for a rough ride. Kohls, the department store chain known for its discounts and middle-of-the-road offerings, has been struggling to stay relevant in a crowded retail market. They've been hit by a perfect storm of challenges, from declining foot traffic to rising costs and increased competition. To make matters worse, they've been plagued by inventory issues and supply chain problems, leaving shelves bare and customers frustrated. They've tried to lure back shoppers with discounts and promotions, but it hasn't been enough. Kohls is at a crossroads. They need to find a way to differentiate themselves and offer something unique to customers, or they risk becoming just another forgotten department store. Even off-price retailers like Marshall's, known for their treasure hunt shopping experience, haven't been immune to the retail slump. While they've fared better than some of their department store counterparts, they're still facing challenges. Inflation has put a dent in their bargain-hunting customer base, and supply chain issues have made it harder to get the in-demand merchandise that shoppers crave. Plus, they're facing increased competition from online discounters like TJ Maxx and Ross. Marshall's is closing stores and reevaluating its strategy, but it's unclear if it will be enough to maintain its position in the increasingly competitive off-price market. 7-Eleven, Slurpee sales can't save this convenience store giant. 7-Eleven, the ubiquitous convenience store chain, is facing trouble behind the scenes. Franchisees accuse the company of unfair labor practices. This has led to protests, lawsuits, and store closures. Rising costs and competition add to their woes. Could this be the end of an era for the Slurpee King? Old Navy, adrift without a captain. Old Navy, once the crown jewel of the Gap Inc. empire, has lost its luster in recent years. They've been plagued by declining sales, an identity crisis, and a revolving door of CEOs. Their attempts to appeal to everyone have left them feeling bland and uninspired, and their once loyal customers are jumping ship for trendier, more affordable options. They've been closing stores, cutting jobs, and trying to figure out what went wrong. Without a clear vision or strong leadership, it's hard to see how Old Navy can right the ship. Urban Outfitters, losing its cool factor. Urban Outfitters, once the epitome of hipster cool, is facing an existential crisis. Their signature mix of bohemian chic and edgy streetwear has lost its appeal with young shoppers who are increasingly turning to online retailers and thrifting for their fashion fixes. They've been criticized for their high prices, questionable designs, and tone-deaf marketing campaigns. Plus, operational errors have led to inventory issues and shipping delays, frustrating customers and hurting their bottom line. Urban Outfitters is trying to adapt, but it's a tough road ahead. They need to reconnect with their target audience, offer compelling products at competitive prices, and avoid the kind of missteps that have tarnished their image. Lowe's, can this home improvement giant withstand the housing slump? Lowe's, the second largest home improvement retailer, is feeling the heat from the cooling housing market. Big-ticket purchases have slowed as interest rates rise and home sales decline. This has hurt Lowe's sales and profits, and their stock price has taken a hit. They're focusing on smaller projects and DIY customers to adapt. The next few quarters will be crucial for Lowe's. Giant Eagle, a regional grocery chain, is fighting for survival. They're squeezed between giants like Walmart and discounters like Aldi. Competition has eroded their market share and profits. They've closed stores and restructured operations. It's a tough market, and their future remains uncertain. Piggly Wiggly, can this Southern grocery icon be saved? Piggly Wiggly, the beloved Southern grocery chain, is facing its biggest challenge yet. Decades of underinvestment and increased competition have left the company struggling. They've been closing stores and seeking a buyer to inject capital. Time is running out, and it's unclear if anyone will save this regional icon. The retail apocalypse is real. Are you prepared? As you can see, the retail landscape is littered with the wreckage of once mighty chains. The economic downturn, coupled with changing consumer habits and increased competition, has created a perfect storm that many retailers are struggling to weather. This is a trend that's not going away anytime soon. It's more important than ever to be a savvy shopper, do your research, and support the businesses you want to see succeed. Thanks for watching.